What's up everyone, Alex here. So in previous videos we've talked about how to analyze and evaluate a stock, and today we're going to do just that with the most loved and hated stock at the same time, which is Tesla. Tesla currently has a Wall Street high target of 1,400, while at the same time it has a low target of 180. This essentially means that investors are completely divided about what's going to happen with Tesla. Is Elon Musk going to ride it into the stratosphere just like Bitcoin, or is it going to crash and burn? In today's video we're going to go over the latest Tesla stock report, see the figures, see the numbers, and see what could potentially be even better investments than Tesla. As always, please like and subscribe this video, and let's get straight into it. So let's start by talking about the facts, and that comes from the latest quarterly report that Tesla just announced a few days ago. The report was absolutely outstanding. Vehicle revenue increased 97%, operating margin increased from 5% to around about 11%, and also other revenue has also increased at the same time. And when we talk about other revenue, we're talking about energy storage and photovoltaics, and we'll talk about that a bit later on. So the Tesla report was very good, and also vehicle deliveries reached 206,000 cars, and essentially it was a blowout quarter for Tesla, beating both revenue and profit expectations. What is actually very important about this specific earnings report is that for the first time ever, Tesla was profitable by 1.1 billion, but it was profitable from its core business. Usually, Tesla gains energy credits. That means because Tesla is a green company, it gets some energy credits. This is the first quarter that Tesla was able to be profitable even without accounting for those energy credits. It therefore comes as no surprise that the latest Tesla earnings report has been cheered by both individual and professional investors. Many professional investors have already increased their price targets and talking about the continued dominance of Tesla. But let's have a look at actually what is happening behind the scenes, behind these numbers, to be able to evaluate whether Tesla is a good stock to buy or whether it's going to crash and burn. So when evaluating a stock, we look at three things. We look at the current business, we look at the future business, but we also look at the management. So when we look at the current business, what we've seen from the previous earnings report is a very solid business that is growing. Now, when we compare that to some of its competitors, so when you compare to Volkswagen, for example, Volkswagen in the recent quarter delivered more than 2 million vehicles. Now, Tesla's 200,000 vehicles pale in comparison, and when you look at other car manufacturers such as BMW, Toyota, Mercedes, it's a similar picture. What is more important when we look at the current business of Tesla is where does it actually stand? Now, everyone assumes that Tesla is the undisputed leader of electric vehicles, but that's actually not true. Yes, the Tesla Model 3 is in some markets the highest selling electric vehicle, but as a company, Tesla is not the #1 electric vehicle manufacturer, neither in Europe or China. And China is one of the biggest electric vehicle markets in the world. But I know what you're going to say.
Oh, Alex, does it really matter if it's #1 or not? It's the best, the most profitable.
Actually, it's not the most profitable. When you look at operating margins, Tesla's operating margins fluctuate between 5 to 5.5%. The recent quarter was a little bit of an anomaly, going to 11%, which is great. But that is similar to actually General Motors' operating margin, which sits at 10%. Car manufacturers' overall operating margins fluctuate between 3 to 7%. So therefore, apart from this quarter, Tesla's operating margin, which is round about 5.5%, is broadly in line with other car manufacturers. So with that being said, let's have a look at the future prospects of Tesla. Now, Tesla has indeed been the poster child for electric vehicles, and they have innovated much faster than other competitors. And let's be very honest, the Tesla car is probably much nicer than a Volkswagen ID3 or ID4. Nonetheless, product matters. So when we look at most recent product reviews from electric cars, we see that the competitors are catching up and in fact surpassing Tesla. And when we look at future companies bringing in competing vehicles, such as BMW bringing the BMW 4 Series, we know that the Tesla Model 3 is going to have stiff competition. And this doesn't mean that Tesla's going to immediately fall out of favor, but the fact of the matter is that you have increased competition coming in left, right, and center. And that's just Europe and the US. But when we look at China, China has already more than 5 competing electric vehicle manufacturers who have higher sales and also are backed by the Chinese government. So we've all seen recently on the news what's been happening with China, how they're regulating industries, and they've already taken action to stop Tesla vehicles being sold. For example, no government agency official can drive a Tesla. All of this being said, I don't expect that Tesla will stop selling cars in China. They're investing and building manufacturing sites in China to support the position, which is great. But China is a very competitive market that has a lot of incumbent local competitors who are supported by the local government. And this therefore gives a certain level of uncertainty and risk to Tesla sales outside of Europe and the US. Therefore, to stay competitive, Tesla needs to upgrade its fleet, because we know that it has more competition, but also the Tesla car hasn't been significantly upgraded or refreshed since its inception, and therefore Tesla will have to start investing in order to make sure that its vehicles continue to be competitive. But when we look at management, and that's the third piece, we look at Elon Musk, and it's very tricky to evaluate. So undoubtedly Elon Musk, whether we like him or not, is truly a visionary. He's managed to create the first US car manufacturer in decades that hasn't gone bankrupt and has undoubtedly radically impacted the automotive industry and influenced the global energy industry with a push to electric vehicles and batteries. So Elon Musk is at times potentially a risk to Tesla stock because of his tweets. We know that he has caused the stock price to fluctuate significantly, but recently his comments at earnings reports show someone who is actually very much in control, and he's also already signaled that he will be taking a step back and letting the rest of his management team take some leadership and ownership, which is good because it means that the company is no longer run by one person and one person's ideas. Having said all of this, when we look at the financials, it doesn't paint a very rosy picture for Tesla. Tesla is a company that has a P/E ratio of 660. Volkswagen has a P/E ratio of 12, General Motors a P/E ratio of 9, and they both have more than 10 times the revenue of Tesla and much higher profitability. So what makes Tesla different? Why is Tesla such an expensive stock, and is it worth buying? Tesla as a car manufacturer alone cannot substantiate its current valuation. Anywhere you put it, even if you increase Tesla's deliveries of car vehicles by 10 and take the current 200,000 to 2 million and assume that Tesla will be able to sell those amount of vehicles, it still doesn't warrant the valuation it has. But its valuation, as we've said previously, is driven by three things. It's management, Elon Musk being quite an inspirational figure, giving confidence to investors that this company is going to continue to innovate. The fact of the matter that Tesla is operating in a very high growth market, so electric vehicle sales are growing overall, and also Tesla itself is more than doubling its revenues year on year. And thirdly, and possibly even more importantly, Tesla's not just a car manufacturer. Tesla already has a big business that generated $801 million this quarter in revenue for energy storage and photovoltaic. This means that Tesla as a stock cannot be valued just as a car manufacturer. Just as a car manufacturer, there is no way that it can substantiate its current valuation. But when we look at Tesla as a potential future energy provider, so for example, Tesla has already signaled that it's going to let other car manufacturers be able to use its charging system, which is at this point in time the best and the most widespread globally. It's also signaled that it has capacity to increase for energy production, sell its batteries to other manufacturers. So therefore, Tesla becomes much more than just a car company. The car itself becomes a showcase for the underlying technology, which is battery and solar green energy. In fact, we could potentially see a future in which Tesla doesn't sell that many cars and is the biggest producer of energy, batteries that are sold to other car manufacturers, charging networks around the world, a little bit like petrol stations, and also photovoltaic providers around the world. When we put all of these things in, it's very difficult to have an objective valuation, but it does mean that it substantiates Tesla having a higher valuation than other car manufacturers. So where does all of this leave us with regards to whether we should buy or sell Tesla stocks? The fact of the matter is, as we've said in previous videos, it is impossible to time the market, and it is also impossible to try and pick stock and outperform the broader index. Yes, sometimes individual stocks do beat the index, but that is something that on average you are not able to successfully do in the long term. So what I would do in this particular situation would actually be buy an ETF that supports electric vehicle manufacturing or battery production around the world and potentially hedge my bets there. Because the fact of the matter is, it is probably impossible to know whether Tesla will or will not become the biggest vehicle manufacturer in the world, but it is fairly certain that electric vehicles are here to stay. Hope you enjoyed the video. As always, sound out on the comment section below. Hopefully this is going to generate quite a few discussions, and see you in my next one.